Glencore is a global metals producer and commodities supplier with big coal and copper assets.
Yep, run by Ivan Glassenberg, South African, but run out of Switzerland. Remember, this one has all of those stuff, plus it's got trading activities, and it's quite a big agricultural trading business as well. It's about half the size of Billiton.
Market cap 477 billion rand. No PE ratio, dividend yield of 2.2%.
I'm not quite sure why it's saying no PE ratio, probably because of adjustments or write-downs and so on in recent times.
2.2% on dividend yield.
Yeah, look, we don't know what these guys are going to pay. I mean, Billiton was on a 7% dividend yield, and I'm probably going to bet you they're going to cut their dividend. And it's not going to be a pretty picture that day that they do it. But yeah, Glencore, like Paul said, there's a lot of marketing and trading activity in there that they diversified a bit more than some of the other guys. There's no direct iron ore production in this company, which a lot of people do like. The directors are big shareholders as well. That's something we normally like as well.
Management endorsing their company.
And they actually bought much more stock over the last 3 or 4 months in their own company. The only problem here is balance sheet. And I think we got another one that we're going to talk about a bit later.
There were some real strong concerns about the
viability and
they had a real wobble, and then they raised money and shored up their facilities with the banks.
Was it touch and go? Could they have imploded?
Yeah, look, we almost had this thing and Anglo imploding at one stage because they were trading the debt to equity holding was like 250%, which normal financiers won't like. But that's normally times you should stick out your neck and believe that these guys will pull it through. It's a once-off event, etc. But there was lots of risk on the table. These guys, CDS spreads and stuff ran through the roof. And it almost looks like they're going to go belly up.
Let's have a look at the share chart, because that will reveal some of that. I don't know if it goes for a full 5 years, because remember, it only listed on the market here in Joburg by way of an introduction about 3 years ago.
And I think Gerbrand, there is the crisis that you were talking about.
Yeah, it went all the way to about 15 Rand from about 60 Rand where it listed a while back, and now it's up to about 34 Rand a share. So
it's halfway, clawed back half of the ground. If you would have stick your head out there, you could have made a lot of money. But yeah, if you were an original investor, you would have probably still be down 30 or 40% on your original investment. Do you believe that we will see a full recovery, i.e. from the 30 to the 60, which was the listing price?
Yeah, I think if you give time and you're a long-term investor, that should probably come through. The fact that they don't have iron ore, I like. They are realizing and paying off some of their debt and getting better prices for some of the offloading of some of their assets than what the market expected 6 months back or 3 months back. So yeah, it looks okay. The easy money, I think, has probably been made, and it's going to be a much more slower and tougher grind from here, I think, in all of these commodity producers.
Well, you hear that. The easy money has been made.
Look, it's tough to know. I'm going to... Do you want to know, are we going hot or not?
Yes.
I'd say not. I mean, it's clearly got benefits, but it's not all that transparent with its earnings. You know, it comes and goes as a function of what's going on. They may make a killing at one point in the canola market. They're bulking up in that trading arena by buying companies like Vestact and so on. So I don't know that they are what you might describe as a reliable earning producer. I think it's appropriate that the management team have such big stakes, but for public investors, I'd say not hot.
Gerbrand?
I'm going to go hot again. I'm happy with some of these producers. It's still trading at below one price to book, and I think long-term wise it needs to be a bit higher than where it's now.
I think this is the trend that we will see for the rest of this conversation.